There is a very novel feature that we've introduced for the first time out of the 200 SPACs that have been done. And the Quartet merger SPAC does not have a warrant. It has a share of common and it has a right. And the rights will be trading separately within a month or two. And they will also be trading on NASDAQ. And that right becomes, initially it will trade wherever the market chooses to have a trade. But upon the successful completion of a merger, that right will continue in existence and it will convert automatically into 1/10 of a share of common. So it doesn't give you the upside that you might have from a warrant, but it gives you much greater certainty of substantial value as long as a merger is completed. Because most likely, if a merger is completed, the stock will be trading at or above the $10.20 that we have in trust. So that right, being 1/10 of a share, will be worth about $1 or $2. So even if the stock were to fall after the merger is completed, let's say to $8, that right is still worth 80 cents. If, as with most SPACs, you have an out-of-the-money warrant, that warrant might be worth 15 or 20 cents. So with the right structure, you'll have much greater certainty of value. We also used this new concept because we think that target companies will like it. With the target companies, we've heard a lot of complaints over the years that maybe they don't want to merge with a SPAC because they're unsure of what's going to happen with the warrants and a warrant overhang and the dilution from the warrants. And with the rights, it's a much simpler structure. The shares immediately upon the merger will convert into that 1/10 of a share. The company knows just how many shares outstanding there are. The investors knows just how many outstanding shares there are. And we think that it'll be very much welcomed by potential target companies.